Starting up a business is hard, really, really hard. Your chances of failure are high. You're likely to lose both your sleep and your hair. But luckily for you, you're not alone. Welcome to ET Startup School, your step-by-step guide to starting, building and consolidating your startup business idea. Your teachers at the ET Startup School will be some of India's best-known entrepreneurs, VCs and domain experts. So grab a notebook, pay close attention. School is about to start. Today's class at ET Startup School is called What are the Secrets of Bootstrapping? Your teacher is Nithin Kamath, founder and CEO Zerodha. Nitin founded Zerodha in 2010 with money that he had saved up. Using a flat fee model, Zerodha went on to become India's largest retail broking platform and one of the largest retail trading platforms in the world. Nitin did all of this without raising any external money, either in the form of equity or debt. What's more, in 2022, Zerodha reported a net profit of over 2,000 crore rupees. Who better to teach us about bootstrapping than Nithin Kamath himself? Nithin Kamath, welcome to ET Startup School. Today's episode is called What are the Secrets of Bootstrapping? Let's start with a basic term first. In your definition, what does bootstrapping mean? What is it and what is it not?
Thanks, Suresh, for having me on this. I think bootstrapping is building a business without diluting equity in the business. Which is without raising any professional money, be it venture capital or private equity. I think few people think raising debt disqualifies them from being bootstrapped, but it isn't. Bootstrapping is not diluting stake in the business, but you can go raise money from a bank or borrow money from someone to build a business. That still qualifies you as a bootstrap business.
So Nitin, if I wanted to start a bootstrap business today, should I raise money from what's called the 3F rule, which is family, friends, and fools?
I think firstly, there's no cut copy paste, right? Not every business can be bootstrapped. Like if you're building an e-commerce business, can you really build it bootstrap? It's unlikely, right? But if you're
or an airline, for instance, you may not be.
Yeah, absolutely. As in, there are so many businesses that can't, but there are some businesses which are very tech heavy, where competition cannot just catch up on you by outspending you. So, in those kind of businesses, you can potentially build it bootstrap. And I think I'm not sure about family, but friends also, I'm not sure. So if you're really going and raising money out, family and friends kind of bring in some obligation of sorts. Mm-hmm. And I think bootstrapping is about building a business without having any external obligations of sorts. So family and friends kind of bring in money, but if it's going to help you get a business from an idea to kind of an MVP by raising some money from people I think I think you would still call yourself a bootstrap business if you haven't gone out there and raised professional money of sorts.
So Nitin, you're saying bootstrapping means not taking money from VCs or PEs. I can borrow money from a bank, which is going to be pretty hard. Not borrowing money from family and friends, ideally, because you don't want to lose your friendships or sour relationships with your family. That leaves only fools or the money that you earn. Most businesses, if not all, need some money to start off with. Tell us, what money did you start off with and where did you get that money from at Zerodha?
A thing that a lot of people don't know is that there was 12 years that went into work before Zerodha started. Now, I used to be a trader from the late 90s. Nikhil, my younger brother, joined me in 2006. He's 7 years younger. He was a better trader. So, and around 2009, the question we asked is, if he's a better trader than I am, why should two people sit and trade? I said, why can't I go give a shot at building a better broker for traders like us? And he continues trading. So we had kind of saved up some corpus. We borrowed some money and, we put together enough money to get ourselves a license on the exchange. So in our business, if you want to become a broker, you need to give a deposit on the exchange and get a license. And you also need to have a tech platform of sorts. To become a broker, you need a license and you need like a trading platform. The defining point in our journey was when the National Stock Exchange of India, they gave out a free trading platform for brokers in late 2000s, around 2007-8. And the idea of Zerodha came by because we spotted an opportunity. We said, if tech is coming for free, can you then go build a business and disrupt on the pricing? So we had saved up some money, and Nikhil was trading. So the first 1-2 years of our business, I think we ran the business from Nikhil's trading income. So he was trading by the side, and whatever profits he was generating was what was helping us run the business. So it would have been impossible for us to bootstrap this if that background wasn't there.
Okay, so Nitin, what you're saying is that you started a business using your own money, properly your savings, and the earnings that your brother was making. You took a bet on a very low probability event, because all startups are extremely low probability events. And you bet the house on it. Or did you have a backup plan? Did you say, if this doesn't work, I'll go back and get a job? What was your backup plan?
No, see, the thing is, we were sub brokers at that point of time. I was a sub broker for Reliance Money. So what it meant was, we used to pay the main broker a certain fees, right? So the backup plan was that if Zerodha doesn't work in 1 or 2 years, I get back to trading. Mm-hmm. And in the process, we would have saved on the brokerage we were paying our, main broker of sorts. Mm-hmm. So the backup plan was that. And also when we started, right, our ambitions were very small. There was no, I still remember the first time I sent an email to 4 or 5 of us, who were part of the original team, that if we get to 100,000 customers, it would be like we have arrived in life types, and because I think if we had like really large ambitions, I doubt if you would have bootstrapped this as well, right? Because
how many customers do you have now? 8.7 million or something?
No, we're around 11 million. So right. Yeah, so it's but if I had 11 million as my number when I started the business, it was impossible for you to have built it bootstrap, because then you would have like I want to chase this number down, and you would have to spend money to acquire customers, and that would have taken you on a different path. So yeah, so I think in a way this whole not being very ambitious also helped us remaining bootstrapped through the journey of sorts.
Nitin, in an earlier answer, you said that not every business can be bootstrapped. So what's a good rule of thumb for young entrepreneurs to know if they're in a bootstrappable business or not? How do I tell?
I think, personally, one of my qualms of this whole, whatever has happened over the last 4 or 5 years in the Indian startup ecosystem has been that it's almost become impossible for startups to today build a business, even get to an MVP without raising capital, right? Mm-hmm. Because the cost of hiring, the cost of, it's just the cost of doing anything is so high that, unless you have like 5 to 10 crore rupees, it's really hard for anyone to build an MVP of sorts. So it's almost impossible today, I think, unless you come from from wealth, or you have money already from family or your own money. It's unlikely that you'll be able to bootstrap. So I think the way people should approach this whole bootstrapping now, in given today's context, is to think of money as an obligation. So when you raise money, the money brings an obligation. And how do you take on that obligation? By overselling or underselling, right? Because if I go meet an investor and I oversell the potential outcome of the business, that investor will then push me to get to that outcome which I promised, mm-hmm. right? But if I'm able to go raise money by underselling a business, right, and then that money comes with much lesser obligation, so it gives you more freedom to run your business more like a bootstrap business, right? If you were to, if say a startup comes to me and say, Nitin, I will get to 100 crores revenue in 3 years, then he's obligated now to get to that, if not 100 crores to 50 crores, and so then he's forcing an investor to be like someone following up and asking, even if someone gets to 50 crores, they're like, you didn't get to 100, that's what you had said in the start, mm-hmm. right? But if he comes and raises money saying, I don't know where I'll be in 3 years from now, but this is the idea, this is a problem that I'm solving, and your money will help us get from this point to this point, and whatever's outcome we will, in the sense, if you were to just undersell the pitch, then you'll get an investor who will potentially be more like a co-founder than a investor of sorts. So I would say in today's world, it's really hard to remain to do anything bootstrap if you don't really come from wealth. So think of bootstrapping as like, think of investors more like how you would get family into the business of sorts, and don't oversell or undersell and get them on the table versus trying to oversell of sorts.
Okay, Nitin, I'm sure a lot of entrepreneurs listening to this podcast are going to say, but I have to oversell. How do I get the valuation that I want? What if I undersell and I have to raise money at an extremely low valuation and I dilute? I don't want to do that.
See, I think it's just not in business, right? I think, through our life, all of us, we are always, we have 2 choices, right? Either short-term outcomes or long-term outcomes, and we are always, I think, prioritizing short-term outcomes over long-term. Like if I'm on a diet, I see a piece of cake, I've forgotten the diet, I'm really bothered about that dopamine hit I get right now. So even I think in running a business is the same thing, it's about, can you prioritize what is right for the long term over what is right for the short term? Because that's what's going to eventually help the business, right? So if today, for example, I think we've celebrated all these valuation stories over the last 4 or 5 years. But if you think about it today, as an outcome of all that, there are a bunch of non-resilient, non-sustainable businesses out there, right? And also all that valuation hasn't really helped create sustainable businesses, right? So I think entrepreneurs should think of business more as 5 years and 10 years, and not 12 months and 18 months. Right. I think one of the problems with the ecosystem that I've seen is that everyone is constantly thinking about 12-month, 18-month runway, and then just doing whatever is right for the next 12 or 18 months, right? And then the kind of choices you make will be very different, right? If you're thinking really, really long term, then you wouldn't really worry about a little more dilution, or you're not care about overselling, or you'll not care about, you'll not take money from anyone. You'll think of 10 years saying, I want to take money from only a type of investor, who believes for the next 10 years and not for the next 12, 18 months. So I think, no, but it's easier said than done. It's a big challenge, to be able
But
to.
You've done it. So it can be done as well, even if it's not easy to do. You and perhaps Sridhar Vembu of Zoho are living proof that it can be done.
No, there is, with us, there has been a lot of right place, right time. We started the business at the right time. There was a lot of momentum in the Indian economy. India went digital, and we were just, there's so many times in this journey we were at the right place, right time. I keep talking about this to people in the office, that if you were to start Zerodha today, it's impossible to do this bootstrapped, right? Because it's impossible that everything that happened in the last 10 years for us in terms of being at the right place, right time will repeat. And also the market is already so crowded today that today, if I had to build Zerodha again, it's, I have to take the path of raising as much money as possible, spending on marketing and advertising and all of that. Because there are already, entrenched competitors today, which weren't there. When we started the business, for the first 3 or 4 years, there was not a single competitor who even came around to say, let me do what Zerodha is doing. Let me see if it's even working or not. So it'll be much harder today. The world's, I think, getting a lot more efficient. So it's those easy opportunities don't exist as many exist in India, at least, anymore. So.
Nitin, I noticed you said the word right time, right place a couple of times in your previous answer. How important is luck for any entrepreneur, and especially a bootstrapped entrepreneur?
No, I think it's important for every single entrepreneur. I have a few things, when I think about luck, I think of it a few ways. Of course, luck can't happen. If you're not really putting work, it can't only be luck. But I think one of the things that you can do to increase the odds of getting lucky is, the longer you survive, the higher the odds of you survive, getting lucky, right? As in a sense, a lot of people think Zerodha as a 10-year-old business, but we've been noticed in the last 5 or 6 years. But there was 10, 12 years of struggle that went before Zerodha, right? As in my head, I think Zerodha is like a 22, 23-year-old business, right? And so I survived for 10 or 12 years, and then luck happened, right? As in, and the question was, can you survive long enough before luck happens? Some people have it in the first year, some might have it in the 10th year, some might have it in the 15th year, right? As in, so I think one way to increase the odds of getting lucky is really, just be able to survive long enough. And to be able to survive long enough, I think you need to build a business around your core competencies, right? Around things that you love to do, right? So then, that the time you spend till you get lucky doesn't feel like a drag, in the sense, you can survive easier. The other thing about luck, the way I think of it is, it's more philosophical. It's just more around, like if more people want you to get lucky, your odds of getting lucky also increases, right? And so if your customers want you to get lucky, your team wants you to get lucky. So when you think of luck like that, then you automatically make choices as a business, which is right for your customer, which is right for your team. And at the end of the day, the only way a businessman can do well is, your customer wants you to do well and your team wants you to do well, right? As in, so I think these two are important aspects. And but luck is It's like the salt in the gravy. You can have everything, and without a salt, that's not going to taste well.
Nitin, the Roman philosopher Seneca said that luck is what happens when opportunity meets preparation.
Right.
Right? So luck
Absolutely.
is opportunities all around us, but we're simply not prepared to take advantage of the opportunity. I'm going to go to your previous answer, which you said you need to last long enough. So sometimes in a business, you have to spend money first, build your product, build your service, build your servers, hire your people. And one of the best kinds of finance, from what you're saying, is customer finance, when consumers actually pay you money to buy your product or service. But there could be a lag. There could be a lag of 3 months, 6 months, 1 year before you need to spend money first and you'll earn the money a little later. How do you survive that period?
See, this whole earn, acquire and then earn is a very, relatively new concept, right? As in, otherwise, traditionally every business, for centuries together, every business acquired a customer to start earning immediately, right? As in, it didn't make sense. If you have to spend more money to acquire a customer than what we can potentially earn, right?
Yeah.
I think what has happened in the last 5-6 years is just excess liquidity in the world, which is kind of pushed people to think of building a business this way. There is also another aspect to this, which is around the tax arbitrage of sorts, right? So I'll give you an example. So today, if I want to take some profits from the business, I have to pay 25% as corporate tax, right? And then I have to pay say 45% as personal income taxes once I take money as dividend or whatever. So technically you're paying almost 60-65% in tax, 55 to 60% in taxes, right? Now, on the other hand, if I sold a stake in my business, I could get capital gains at 20% versus paying 55% on profit, right? So the thing is, also what has happened is, I think for a lot of investors in businesses, they don't care about a share of profits anymore. They want a share of the valuation because it's a lot more tax efficient to get capital gains versus trying to earn through profits, right? I mean, if you go back in time, people wanted to earn through dividends, right? Back, many decades back. But today, no one cares, right? If you go ask any of the startups and you say, I'll give dividend to my investor, the investor will laugh at you, like, dude, why are you giving dividends, right? Because so the thing is, the kind of money that is coming in is also coming with saying, I don't want your profits, I want a capital gain. So, dude, you just take this money and continuously keep growing. And this whole continuously keep growing, you cannot keep growing all the time because, markets also have cycles. There are up cycles, down cycle. Like, now that the interest rates have turned around, you can assume for the next, the consumption cycle is going to, taper down of sorts, right? As in, and at that point of time, you can be a sitting duck if you haven't reached a profitability, self-sustainable kind of a area when the cycles turn around. So I think there are so many things that has played around this whole acquire customer at whatever cost, right? Because what was happening is all the valuation was based on how many customers you're acquiring at what rate. Right. So the investor is forcing you to acquire as many customers at what rate. Otherwise, as a business, it makes absolutely no sense. Right? Like one of the reasons I think we have remained bootstrapped is because we haven't spent a single rupee on acquiring a customer. On the contrary, we collect 200 rupees per account from customer. That means when someone asks me what's the CAC, we say it's minus 200 rupees, right? Because because we actually charge money then. And the reason for charging money is because, one, we're in the business of money. We want to set a sense of seriousness when a customer onboards. Every customer brings a compliance cost, right? As in, if our customer comes and, he does a fraud somewhere else, so we can potentially get caught in that, right? So, I mean, there are a lot of costs acquiring a user, and it's just not, it's just not a vanity metric saying, I have 11 million users, right? So I think yeah, all of these together has kind of.
Not only do you not have any customer acquisition cost, you have a customer acquisition benefit to yourself. It's not even a cost; it's like a customer acquisition revenue.
Yeah,
not a CAC anymore. It's a CAR or CAP that you need to invent.
I mean, so we keep talking about this. The 11 million customers. If we had spent, say, between 4,000 to 5,000 rupees acquiring a customer, which is what a lot of our competitors spend, acquiring an active customer.
5,000 rupees, that's a lot.
Yeah, but active customer, right? I mean, you can get to get one active customer, you would probably have to spend on 8 inactive ones, so, right. So yeah, if you would spend, to get to our 1.1 crore customers, we would have spent 4-5 thousand crore rupees. Now, 4-5 thousand crore rupees is all the profits we've generated, net profits we've generated from the start. What it means is that if we had spent, 3 to 5 thousand rupees acquiring a customer, we would not have been a profitable business. If we are not a profitable business, we would have had to go raise venture capital.
Here's what's difficult to understand. So you went from launching Zerodha in 2010 to becoming India's largest retail broker and amongst the largest trading platforms in the world. Now, I understand you didn't take any VC or PE money, but how on earth did you do this without taking on any debt as well? You are debt-free as well today, I imagine.
Right. Yeah, I think building a business is like growing a forest. You cannot just, like put fertilizers and pesticides and hope that it'll grow. I think it takes time to build one. It's slow and steady. So we've never. I think this whole bootstrapping fits in very well with the philosophy of some of us as a core team. We have never gotten up any year and said we want to be at this target. Right? The goal always has been we get up every day, we try to do something better. We improve our product, we improve our customer service, we improve whatever possible slightly, and you keep doing it over time. This will have compounding kind of benefits, and then it will take time. So our the first 5-6 years, I think until 2016 we were at 70,000 customers, right? And so it was a slow, steady growth, which also gave us time to learn about different aspects about business. Learn about technical debt and all of these things that you would not have learned if you had kind of built it in a quick time. If you had gone from 0 to say 20 lakh customers in 3 years, I don't think we would have had the time to learn from a lot of mistakes that we made, right? Because at that time you would just be trying to do whatever it is to kind of handle the customers of sorts. So I think the learnings have been better because we've grown, we've taken time to grow. The other philosophy that has also worked very well is this whole don't do to customer what you don't want done to you, right? As in, yeah. I mean, it is. A lot of people say it, but I think we've been kind of, I think we've mostly followed it. Like, for example, we are a no spam business. So we don't send one email, one push notification unless the customer asks for it. Mm-hmm. As in, we have done 12 push notifications on a mobile app in the last 1 year. And that too after a lot of debate. Internally, we talk so much before we send one push notification. Because I think push notifications are annoying, so
I like receiving them. And they're just constantly popping up and getting in the way of everything that you're trying to do.
Now, bootstrapping allows you to follow it, and which means that that you're one of the few businesses who can say and do something like this. Whereas other businesses who are always forced to grow at any cost will not be able to take this stance, saying, I'll not push notify, I'll not throw ads wherever possible. I'll not trigger customers to transact, even if it's not right for the customer, right? So we can more, gives us more freedom and leverage to do what is right for the customer. And that's why, I said earlier that while today it's not possible to build a business bootstrap, almost any type of business. But at least, if you kind of get investors on board for the cause and not oversold to the story, then they might help you kind of get some of the benefits that come along with running a bootstrap business, which is to do what is right for the customer before even you think what is right for the investors.
Nitin, you're not painting a very rosy picture of VCs and investors. It sounds like they're these hard taskmasters have a whip behind you. Moment you take their money, they're going to drive you to do all sorts of bizarre things that you may or may not want to do.
It's not like that. There are great businesses built, raising venture capital. But the problem with, I think, capitalism in today's world, and maybe even venture capitalism is it's growth at all costs. Right, entire venture capital model is built on one or two super outcomes in a portfolio. So the venture capitalist is forced to kind of push you to be that outcome or perish, right? As in, because they want 100x on every investment they are doing, right? So because anything which is giving 1.5x is not enough, right? As in, so it's
been considered pretty good, say 50 years ago or 30 years ago. Return would have been considered extraordinary.
Yeah, no, I think I think it eventually boils down to all the excess liquidity in the ecosystem over the last 5-10 years, and which is kind of, these are all different phases to that excess liquidity of sorts. When money is available cheaply, so it's like, all these weird things have happened in the world.
Nitin, I think Reid Hoffman, the founder of LinkedIn, did a great disservice to the startup world by inventing this term called blitzscaling, which is to go from, say, 100 customers to 1 million customers overnight. And I don't know if I'm quoting him correctly, but he said something to the effect of, you do whatever customer service you can, including if you can't afford to do any customer service while blitzscaling, then do zero customer service. Just scale and do this giant global land grab to grab as many customers as you can. How did you resist the urge to blitzscale?
Yeah, no, I mean, I don't think it ever sat in well philosophically, in the sense, even when we made money, this whole, let's maybe spend some money to, acquire more users faster, right? Because 2020, 21 was really stupid years of sorts, in the sense for the broking industry, as in there's so much interest in the markets.
Mm-hmm.
And, like the competitors doing IPL ads and etc. Right. So, it was very tempting, but it didn't feel like the right thing to do, so it didn't feel philosophically the right thing to do.
You competed with very well-funded competitors when you started Zerodha, and you compete with equally well-funded competitors now. So how do you compete with well-funded competitors when you're a bootstrap business?
No, I think when you don't have too much money in the bank, you automatically think like that. So this whole I'll wait for profits to happen, etc. It comes when you have money, like excess money on the table. And when there is no money, I think you automatically are wired to figure, how do I acquire user to make money?
Nitin, are you a fan of the TV show Silicon Valley? The one set in.
Yeah, absolutely.
There's one episode in which there are a group of entrepreneurs chatting, and there's a VC, and one of them says, my company actually made a profit last quarter, and everybody's shocked. I think, are you crazy? Never make a profit. If you make a profit, we can value your business as X multiple of the profit. So never make a profit. That's one of the worst things you can do. What happened to the good old-fashioned idea of starting a business, creating a product or a service, selling it at a profit, and starting to be profitable from day 1 or day 5 or day 30? What happened to that idea?
No, I think that idea is coming back. So now that
the funding winter.
Yeah, no, now that the interest rate cycles have turned, when money was available at zero cost, right? I mean, it was easy to kind of build businesses, just leveraging it at low cost capital. Right now that the interest rates in the USA is 4.5%, 5%, and so that money is coming, at a certain cost. It's not going to be easy raising capital now. So I think you're already seeing it, and all startups are talking about profitability. And I think it's going to only intensify. I don't see how this cycle turns around very quickly. This seems like, we are in at least 2-3 years before our life turns around.
A round of madness hits us. Nitin, you don't seem to place much importance on the concept of valuation. Am I right about that? You valued Zerodha at 2 billion?
In reality, yeah. Yeah, 15 times. So I think, we will grow. We can potentially grow the business 10 to 15% year on year from current levels for the next 10-15 years. So yeah, we multiply our profits in that 10 to 15 times range, and then value ourselves. And the only reason we value ourselves is because for the ESOP buyback that we do in the business. But if you were to ask me, Nitin, what's your valuation? I'll say the money in the bank. So that's really the valuation.
So for a bootstrapped entrepreneur, would 10x of revenue be a good way to value your company? Or 10x of profit or 3x of revenue? Would those be good metrics?
No, I don't. See, the thing is, it depends why you're valuing yourself, right? If you're a bootstrap business, you don't have to value. That's really freedom in itself, right? As in, otherwise...
People like us in the media will constantly ask you, what is your valuation, current valuation?
I don't think a bootstrap entrepreneur should go the route of even telling a valuation. We didn't ever declare it, but when we did this whole internal valuation, it got out and it got a lot of press, right? But I think because, as soon as you put that valuation, then you're trying, most entrepreneurs are very competitive in nature, right? And once you have a certain number, now you want to beat that number, right? And suddenly you're then trying to optimize for what is right to make that valuation more. And as soon as you get into that journey, it's very hard to remain bootstrapped.
So value creation versus valuation. That's the classic debate that many entrepreneurs are stuck. Now, Nitin, you must have received phone calls from every VC and PE in the world worth their salt, right? How did you turn all of them down? How did you resist the urge? Did they find it impolite that you'd said no to their money?
Not really. I think a lot of them were surprised. When I met some of the biggest investors in the world. I mean, I've met everyone. I keep in talking terms because I think these are some of the smartest guys I know. The guys working in the VCP community. So there's a lot to learn talking to them with all their experiences. I've spent a lot of time, but a lot of this interest came for Zerodha only after we started making money. So and by then I had kind of realized that the freedom that you have bootstrapping is a lot more valuable than the money that you get by raising capital. So and then it allows for us as a business to do things which is very hard for competition to do, right? And so yeah, so once we realized that, then it was a no-brainer. I was like, why even take on this obligation that will force us to change the way we operate as a business. I mean, I think the checks only got bigger over time. Last 1-2 years, when Robinhood was at, I think, 85 billion valuation, I had a conversation. One guy said, "Why don't you go buy yourself an island or whatever?" And then, and then I said,
Did you buy an island?
No, I mean, the thing is, one of the reasons I think we've all been able to stay this way is also because the core team, no one has any material ambitions in life. I mean, there was at one point of time, but then I think a lot of us kind of hit the plateau like a long time back. So incrementally, nothing has changed over the last 3-4 years, in terms of materially. So there was no material goals in life and ambitions of sorts. So then, yeah, it's like, take money and do what, right? And it's really, that was the kind of question we asked. And even with our own capital today, which is not, which we think is not required for the business, we are, through our foundation, we've allocated like $100 million and, we've deployed 50 million through that already, So we already started doing that because, the belief is that, as and when this wealth concentration problem increases, I think society is going to become a lot more complex, and wherever there is concentration, people have to do something about it.
So, Nitin, let me ask you a personal question. Were you born into a wealthy family?
No. My dad is a bank manager. My mom used to teach me minors.
But your son is going to be born into a wealthy family.
Absolutely. It's.
How are you going to manage this?
It's an extremely. I think, when I think about, my life right now, I think it's the most complex problem to solve. He's 7 years old and I don't have an answer to it. I've tried to put him in a school which doesn't give too much value to money of sorts. And, I'm trying to have him hang around with people who don't care and value based on, the wallet size, etc. But it's going to be hard for him because, whatever he does, I think he plays good drums, for example. But, I remember one of these conversations where someone said, he comes from wealth, so he can learn, he'll probably have the best teachers to teach him drums. So I think, that's going to be a baggage for him.
You had a lot of that in his life, I guess.
Yeah, it is. There is no two way around it. So I think right now, I'm trying to figure ways for him not to take all of this for granted. Which is very easy in today's world. And two is also help discover what he loves to do, and because when you find something you love to do, I think you'll stop chasing for it by spending money. Because today,
and you're saying this is the biggest problem you're trying to solve for these days.
Yeah, absolutely.
Okay, getting back to the last few questions in the interview. Once upon a time, we used to say, here's a business, it's profit making or it's loss making, right? And now we hear of all sorts of new terms, GMV, for instance. I don't understand what the term really means. It's just the value of the merchandise you sold. It doesn't matter if you sold it at a profit or loss. There's EBITDA positive, EPS accretive, operational break-even. For a young entrepreneur, these terms can be a bit confusing, Nitin.
Right.
So what is your suggestion for what are the top metrics a bootstrapped entrepreneur should look out for in his or her business?
But
Profit. Yeah, the only one that really matters.
Yeah, I mean, how much your bank balance is going up? Because see, the thing is, I think for every entrepreneur, right, the more the runway you have, the more mental peace you are at. Like one of the, I kind of hit my mental peace, like I think peak levels when I knew that Zerodha has a runway for 8 years. In the sense, even if the revenue goes to zero, we can survive for 8 years to figure what to do. Mm-hmm. And I think for especially for bootstrap founders, who are not thinking of raising money, I think slowly and steadily building up on that runway means that you'll eventually it keeps bringing more and more freedom of sorts. Yeah, so I think so. The only way you can increase runway as a bootstrap business is by pat. Everything else means nothing. Really. So.
Okay, another last personal question before we finish the interview. While you've never raised money, you're an active investor in other startups. Is there a dichotomy there? Don't you feel like calling the startup founder and saying, first, please don't raise any money, and don't take any money, and certainly not from me? Do you feel like saying that to startup?
No. Almost every startup founder that we see. The thing is, when we started Rainmatter, which is a fintech fund, the idea was to collaborate, because we said we want to expand the capital market ecosystem in India. And we said we can't do this ourselves, so we need to partner and collaborate. And that's how we started talking to, and it was not really for investment, it was about how do we collaborate. And then when we realized that they also needed money, we said, what, let's also invest. But right from, when they ask for our check to when they go out and raise other money, my advice has always been the same, as in, don't just take it just for the sake of taking it. There's a whole saying, right? Take money when they're giving. I think money brings obligation. You shouldn't take it even if you don't need it at all. So and that's been a stance. And like I said, in today's world, it's impossible to build a bootstrap business. I think 99.9% of the people can't build it bootstrap, right? So you need to go raise money. I think it's about finding the right kind of investors, because as a startup, there are a lot of blind sides that you have, and the right kind of investors can help with those blind sides as well. So yeah. So I'm not saying everyone should go build a bootstrap business, because it's really hard today. But think of even if you were to go raise money, think of money as an obligation. Then you will automatically think of underselling to your investor and doing what is right for the customer and all of that. So.
Okay, Nithin Kamath of Zerodha, thank you very much for being part of ET Startup School.
Thanks, Suresh, for having me on this.
So that brings us to almost the end of today's class at ET Startup School. If you'd like to be a good student, check out and do the homework assignment in the show notes. If you like the podcast, share it with family, friends, even your frenemies. ET Startup School is produced by Animesh Das with inputs from Anupriya Nair, Erika D'Souza, Arijit Burman, Shilpa Sharma, Harish Chavla, Govind Mundra, and Vishal Bhandari. ET Startup School is available on economictimes.com and ET Play, as well as Amazon Music, Apple Podcasts, Spotify, JioSaavn, and Google Podcasts.